Hello everyone, I am Ankit Kanodia from SmartSync Services, a SEBI registered investment advisory firm. Welcome to the 11th episode of Investing Karwa, a Mission Smile initiative where we invite stalwarts every month and learn from their vast experience in the investing field. For those who are joining for the first time, Mission Smile stands for Making New Stock Market Investors Learn It Through Engaging Research. Before we begin, I would request everyone to please keep yourself on mute and switch off the video so that we can have a seamless discussion and soak in all the wisdom. You may type in your question on the chat box. In the end, we have scheduled time for your questions. So let's begin. Today, our guest is Mr. Manoj Dua, and the topic of our discussion today is Beyond the Surface, Decoding the Real Estate Puzzle. So normally, I give an introduction of all the guests who come to our platform. However, today, I have made a slight change. I have requested Mr. Gaurav Sood to join us and give us the introduction of Mr. Manoj Dua. Gaurav ji needs no introduction. We all know how fascinating his journey has been in the stock market, and we have been lucky to host him in our third episode of Investing Karwa. You may check out the recording in case you have joined us recently. Gaurav ji, it would be great if you could just share with us a brief intro of Manoj ji. I have unmuted you. You can go ahead.
Ankit, can you hear me?
Yes.
So thanks for inviting me for this, Ankit. I've known Manoj ji for the last 2 decades now, and have been lucky to call him as a friend. And he's one of the most astute investors that I can think of. And what has been different is that he started his career as a investor right from the beginning, and started very small, learned the ropes, and right from a very middle class background. Over the years, he's built his capability to do things, and obviously he's compounded money at a rate which is I won't know the exact number, but it's an amazing compounding story that he's been able to build. And he's been a great investor. Earlier, I would say more than an investor, he would trade a lot. And I know many anecdotes from that journey. And but the interesting aspect now has been the way he's pivoted as his pool of capital has increased. And one of the other things he says that I don't want to spend so much time as I used to spend earlier. He's pivoted his style of investing so dramatically. While many people say that they do that or try to do that, I can vouch for the fact that his style of investing has changed over the last few years. Uh, he's been able to discipline himself around it, and talking to him has also helped me a lot in terms of how I structure my portfolio over a period of time. Uh, he's he has a very different way of looking at things. Some of the terminology is different. The terms he used are not the classic terms, but once he details out how he looks at things, you really understand that it's a very different way of analyzing things. And discussing with him, I have typically run a concentrated portfolio, and his thoughts around diversifying your portfolio as it scales up has been extremely helpful in handling situations as especially around COVID. So as you know, I also made a bit of money. Today's topic of discussion is real estate, and I've also made my money in two real estate stocks in a big way, which is Unitech and Ashiana. And I always thought about picking one right candidate and then just holding onto it for dear life. But our discussions have again helped me kind of realize how it makes sense in certain sectors. It makes sense to have a portfolio or a basket of stocks approach rather than just betting on one particular company, because there are so many regulatory challenges that are involved, and it doesn't make sense to have big concentrated bets, especially in the sectors where regulation has a role to play. Uh, the other aspect that I can think of about him is earlier he used to cajole us and tell us that any information you get or on any idea, you have to share it among ourselves, and he would tend to trade on it. Now I excitedly call him up once in a while that this is the idea that I like, and he's least bothered about what is happening, whether there is value or whether there's an opportunity. He says that this will just come in a bucket or my queue to research, but I'm not going to act on it. So it's such a different evolution that has happened. It's helpful. Uh, I for now I consider him to be a better analyzer of real estate stocks than I was. I had certain insights, but since then, most of the real estate stocks have been re-rated, and now it's a very different way of looking at things. And he focuses a lot on the runaway ahead for any given company, and that's a way that has helped me also to start looking at stocks in my portfolio. So yeah, that's largely around it. I haven't made in terms of his background and the other introduction, but he's based out of Noida, and and he's an engineer that I and but he's always been an investor that I know of. So so that's kind of sums up what I know. Uh, his concept of valuing a company and how to look at things is again something very interesting. And Manojji, we look forward to your thoughts on the real estate sector. Thank you.
Thank you so much, Gauravji, for agreeing to do this. That is the reason I called you and requested you, and I'm so happy that you uh, came on and gave this introduction, because I could not have given even 10% of this introduction. So thank you so much. And Manojji, with this, we'll start straight away. Before going to the question answer, maybe you can give a small brief, anything you want to give as an opening remark or something like that, and then I'll straight away come to the questions. And Gaurav, yeah, please feel free to chip in whenever, because you are also a very good understanding. You have an understanding of deep understanding of real estate sector. So whenever Manojji makes a comment, if you feel like adding to it, it would be great if you can share your points as well. You can just raise your hand. I'll unmute you. Okay. Thanks. Yes, Manojji, please go ahead. I think he has lost his line. Oh, you have. Yeah, I've unmuted you again. You can. I've see. You can see. Yeah. So just try again. Yeah.
Okay. Thank you, Gaurav. You have been very gracious enough in those words. Actually, Ankit, we have taken many problems together to break it to the solution. So we have discussed a lot on the many aspects of the investing, even in the emotional, and it was typically for us where we are and how to make it forward better from here. So all the joinees, so I'm Manoj Dua. I'm a full-time investor for the last 2 decades, and I'm not a SEBI registered advisor. Neither I have a PMS and registered advisory. And this thing has helped me in taking more risk, more flexible, and because I'm not committed to any yearly returns or something, I can have a longer horizon also. So I started my investing journey with typical Benjamin Graham style. So what was feeling in 2001 and 2, and there was not so enough material to think so much operationally about the company. So what was our feeling at that period of time? That we as a market is run by greed, fear, randomness, and volatility. We have to take advantage of these four factors to make money. So we were not thinking how the company can grow in 2, 3, 5 years. For us, it was like that to judge a future. It's not a right thing. You cannot foresee a future. So you just take advantage of all these elements of behavioral finance. And so what we used to do, we used to buy when the price was on our side with some very basic ratios, and and wait for the pendulum to go on the other side. When the market is pessimistic, we are buying. When the market is exuberant, then we are selling. And good money is made by that process also. But what happened as we go forward the journey, some of the stock which we sold in the euphorism and etc. came back, but some stock went up to the crazy level and stayed there. And from there also, they looked like a decent compounder. And in those stocks, then institutions entered and they said it's a GARP growth at reasonable price. Or to our nightmare, the some to our stocks which we sold came into the BAP category. You can buy them at any price. So that got to our thinking and what we are doing. So it is making money, some changes we can make. It was a lot of laborious work. You lot to have so many depth of the breadth of the company. Maybe depth was not required, but we saw the market is an asset class where two stock itself is changing your value if you are able to hold to them. So we used to like imagine like that. Okay, we are in this year. 3 year back, if we had locked the portfolio, just locked the portfolio 3 year back, where we would have been, we were been always higher than of the churning. So, but practical solution is we cannot just lock the portfolio like that. So if you go, I used to write in dalalstreet.in. If we had just bought those stocks and just sit here also just now, maybe one or two stock might have been gone to zero or something like that. But some stock have given so much money that we need not to do all the work. So I decided. So most of us who started during that time in the Soy in our history interview also that he's looking for growth. So we call us as a value investor. Okay, but now we are respecting some aspect of it, where we reverse engineers why this stock went to that level. So we started looking at that point. So as of now, if you ask me who is a value investor, we see the value in longevity, we see the value in growth, we see the value in architect of the company, we see the value of the management which is running the company, and on the top of it, we are seeing the value at which it is trading. So that thing itself changed our style of investing because we're doing a lot of work. And still, if we see some stocks are given humongous return which we are not holding. So somebody called me last week back that you recommended me SRF at 35 rupees. I sold at 4,000 rupees. Okay, I made good money. This is this. So it is a mixed feeling. I didn't even remember recommending SRF. Neither I sold at that price. So some of the stocks we thought, yeah, what are these stocks which are doing different than others, so that we can move to one more ladder up. So now we want these aspects where there's an architect of the company, there's a growth, longevity, and the management is required. But one part we are taking from our past journey, we are not going to pay up. And as soon as we put those lines in that table, things go very differently way one analyze the stock. Because finding great stock is not a difficult thing. Finding all these characteristics without pay up change the whole scenario. It leads to that stock might be in headwind. That We don't want headwind, but because we don't want to pay up, we will only find great stock when they are headwind, or the market is very pessimistic, like what happened in COVID. It doesn't matter. You can get a good stock at the good price, or the company is in a transformation stage, like we bought TD Power when it was transformation stage. It's a good company, but you can't find it because it's a transformation stage. Intellect at some price was at the transformation stage. So, or we have some variant perception. Maybe that's a real estate. We have some variant perception about it, or we have a taking some contrarian stand. Gaurav, you think I'm a contrarian investor? I think I am not a contrarian investor, because we don't want to take a opposite stand. We want to take a differentiated stand where we get a great company at a right price. We want a great company, but we don't want to pay up. So that causes lot of new things to be added, lot of head breaking, how to get this and this kind of thing. And this is a journey which I am thinking I have to take it forward, because it adds to the knowledge every year, and hopefully I make less mistakes as I go forward. Yes, Ankit.
Thank you so much. That was great. Great way to start the session. I have a lot of questions related to real estate, but before we deep dive into the real estate sector, please share about your journey and evolution as an investor over the years. You have mentioned something in the past, as in at the start, but anything particular life-changing moment in your investing journey you would like to share with us?
So life-changing is there was something in the heart that we are doing too much work. And when we are churning the stock, we have to see a lot of stocks for that. And the biggest thing which was I was getting hurt was that knowledge was not increasing, depth was not increasing, handle on the industries was not increasing in that way. So I met one of my mentor in the Mumbai, which I like that guy like anything, because his face was so smiling, and so aura was there, that the calmness which equity investor I find was there, because they got the depth of the industry, they got the depth of the stock, and so they can calmly pass their journey. Our journey was little bit more anxiety, because if you're buying not a great stocks and something like that, you're just buying a scuttle, this Graham stocks and something, you're always anxiety is that if the market falls, which stock you have to churn, which stocks you have to buy. So that point I decided, okay, I have to do this, I have to transform. It is getting high time. There was a lot of material also available at that period of time. So I thought that it's better to change rather than, there is an age where you can change also agility. After some period of time, I might it difficult also. I think I was little bit early, and I still believe my method will still make, old method will still make money now. But I want to change, because that increases the knowledge as we go. It is like building muscles. What I was doing was running on treadmill. Now I think I am that process. You get better and better every day, and you will have to do less work, or your competence or your hit ratios might increase in that.
I have a follow-up on this. So you mentioned that the depth was lacking. But
Yes.
if we look at any investor who has made really good amount of money, even if we take for the so-called Mr. Warren Buffett, who has been quoted all around the world, even he started with churning a lot in his portfolio in his early days. So is it something which you would recommend that as a, when you start as an investor, you should probably focus more on breadth and increase the depth as you go on? Is it what something which you would?
So at that period of time, especially Warren or mine in 2000 also, that kind of material was not there. So Nick Slips letter were not there for me. So now you can think from the long term, from the beginning also. It is an aspect you have to choose where you are. I think one has to find his own way, and how he is positioned. One question I can't answer for anyone, which I think how to build capital first. Is it by trading or is it by investing? I don't have an answer for that. We got lucky, and because of 2000 to 2008. So we don't know. I don't have an answer for anyone who comes to me. But you are taking a long-term view. You are taking in terms of this, how to build capital from a smaller money, because compounding works on a decent size. So I don't have an answer for that.
That's a very good way to put it, actually. So actually, it is more of a personal decision. We have to take a call ourselves, what kind of investor we want to be. And now we have a lot of material, as you rightly said, which was not available.
It was not available earlier. So there was not even thought about it. It was always looking that market is uncertain. You just take the advantage of volatility or something like that. It was difficult to perceive how this company can be in 2, 3, 5 years. If you see now, there's a stoic, this one, Ishmut is teaching. It's so nice thing is happening. So much knowledge is coming in just so on. You are teaching, you are also giving. So there is a way that has shortened the period of learning and all this thing.
So now I'll move to the real estate. So my first question to you would be, is real estate a good sector or not? And I'm not asking from an investment perspective. I'm asking from an owner's perspective or from the point of view of a developer. Do developers really make good ROE in their books and sustainably good ROE?
It's a very good question, but sustainable is, I have to remove that from that statement. But let me give a brief profile what has happened in 10 years last time. So, and that is possible of recency, which is of what has happened in last 10 years, causing people to think what happens with the real estate in general. So that's a recency bias of a long decade, which is happened in our mind, because most of the people journey are in that period. So what happened? There was a bull market from 2005 to 2013 for the real estate. And then it was a bear market. And that bear market itself was filled with reforms and disruption. So in 2016, Demon happened. Then 17, GST happened. There was different rules for selling so there was so much confusion what to buy and what not to buy in these rules. Then after that, there was ILFS came going on, IBC came, RERA came, and on the top of it, there was election, there was uncertainty, and then the father of all, then COVID came. So it has a very last different 10-year, maybe which is a different way, which normally doesn't happen. But real estate is a deep cyclical business, but it is different than other cyclical business like sugar. So what is the difference between this cyclical and real estate? For example, sugar and maybe real estate. So these cycles are very long in India. Maybe it will be shorter in future, I don't know. But these are typically long cycles because it takes 4 or 5 years to build. So supply comes late, and excess supply doesn't come easily. And at the same time, if there is excess supply, it doesn't go away easily. And what is a big thing is, which is in benefit of real estate is, for example, sugar consumption is X ton per year. I'm not going to say after 10 years, this consumption will be 2X. It may be cyclical because of the raw material price or because of the finished product price, and that is changing the ROEs of the company. But in real estate, I can think in the India case, whatever number of houses we are selling in 7 micro market, like 4 lakh, 3 to 4 lakh apartments, can be 8 lakh, can be 12 lakh also. So even if it is cyclical, the top of that next cycle may be different than the top of the past cycle. So when we see, is real estate a good business for a developer? And if it is good for developer, most likely, if you find the right management, it will be good for the investors also. So one thing we have to see, if somebody is able to sell the inventory on the launch, if sales engines are good, and what is required for sale, that's a different aspect, what other parameters are required. So if somebody is able to sell at the launch till the construction, that's a good ROE business. Let me tell you why. So I have a question there. Let me add to it or something like that. No, it's a different thing. Okay. So
you can look at the question in the end. Right now,
okay.
You can continue. Yeah.
So my point was, in only real estate, there are one item on the left side of the balance sheet or the liability. That is, one is equity is everywhere, reserves are there, debt is there. There is one more head in the real estate, which is a big parameter, which is called customer advance. This is the only sector where we pay something to a guy who gives house after 5 years. everything. We go to buy Apple showroom, we pay money, we give us the phone and maximum in this car. This time we have paid a token money of 10,000 or 15,000, which they are giving after 1 year. But there is no other sector I can think of. We are paying a large amount of money and then giving the product after a longer period of time. If somebody is able to sell the house product between launch and the delivery, that can make a very good ROE and very good ROC, because it is made from the customer advance and it reduces the risk of the finished inventory in case of any recession is there. But how this selling happens depends on the multiple factor. There may be one Oberois who's able to sell because of his aspiration brand. Shobha may be able to sell it because of the quality, and I mean, there is cult customer base. Godrej may be able to sell it because of the good finding the right product which the customer is needed, making great sales channel. So if somebody, let me summarize that for you, somebody is able to sell the housing between launch and this, I have seen there's a good operating margin of the project level also, and at some scale, if they're selling at profitable value, I think that's a good ROC business. And it's a disruption-free business. Most of the business are finding disruption. In automobile, we are finding disruption. It's a long traditional business, I think, which will be always be needed to space to live. So it is one part where it is a disruption-free business also.
Yeah, so that's a good point.
So last 10 years has been, because people are saying ROEs are not there, because last 10 years has been different. And even the COVID, and one of the biggest problem people are finding not to see it, because after that accounting systems have also changed. And one more disruption happened in this accounting system has changed. Now you can only book revenue when you are giving delivery to the buyer.
Right. So as you said, that there is no disruption, specifically technology related, no disruption happened in this industry. But there's another aspect, which is there is also no barriers to entry. So how do you look at this sector from that perspective? Because anybody with any capital and capacity can start the business tomorrow, maybe. Or how do you look at it? How easy or how difficult it is to start the business? Okay. Yeah, you can. I've unmuted you again. Yeah.
Okay. Okay. So there is a one big. I was listening to one big fund manager who was saying we don't buy real estate because there is no entry barrier to this business. Everybody can enter to this. But there, if you see, there are many businesses like that. NBFC is like that. What is the entry barrier to the business? But there are some Stolas, there are some Equitas, there are some SDFCs where you can make good money. So there are many things required which build, like NBFC, you require a great underwriting skill. In this, I think anyone who mastered the selling, because and how he covers the selling because of right selection of product and access to capital. If somebody have a great access to capital, like Godrej interest rate borrowing is at 6.5%. He can lend to the NBFCs guy. That kind of access to capital is there. Someone has a good branding part. So, and most of the thing, which is the best thing in some builder, even if it entry to bear, trust has been lost, and it has been only few builders are able to have that trust that we can give you product in the advance from the customer. If somebody doesn't have advance from customer, it is very difficult to make the money. So I believe that even if it is not an entry barrier business, once who do it properly will make good ROCs. And there are many factors to small. It requires 360-degree approach. Real estate itself is a difficult business, because what happens is you need right selection of land from raw material to finish, which is not in another industry. Like you have to buy the right land, you have to buy at the right time. You cannot buy at the exorbitant prices. You have to know the customer pulse. You have to know the regulatories. You have to construct it properly. Even if you are selling, like somebody can argue Unitex sold, but he didn't deliver. So you have to construct it accordingly, and you have to may take many parts of the thing. It is not like that this is a no entry barrier business, so ROCs can't be made.
Right. So my next question is related to the aspect which you alluded to a few minutes back, wherein you said that it is deep cyclical business, right?
Yes.
So when I looked at the Nifty Reality Index, so it has given zero returns over the last 13 years. So I have been hearing from my friends in 2018 also, people said that maybe the sector will turn up. And then in just before the COVID also, we were hearing the news about, of course, COVID was an externality which nobody can predict. After COVID also, it was a clear case where everybody was bullish on the sector. But even today, after 13 years, when the return is zero, how can you bet? And as in, for investors' sake, how do you look at this sector directionally from here?
Okay, so if you go by the history, like if you see the first bull market of there are many bull market which I have seen in the real estate. So the place where I'm sitting here, so I bought this plot at 20,250 rupees square meter. So the ask seller bid was at 20,000. I was at 18,000, and in the last, because the cycle was turning from the okay, I will pay you 20,000. He says no, price has changed. It is 2020. So, and after 1 week, he came back. Can you sell me at 22,000? So there was a period where in Indrapuram apartment used to quote at weekly rate. So most of the people haven't seen that kind of zone. And 2004 to 2008, if any company changes its name to housing, or there is a company called XYZ Chemical Limited or XYZ Infra, Computers Limited, if it changes to XYZ Housing Limited, that stock used to double in 1 month. Just you have to change the name housing. So just because we haven't seen that period, we are forming an opinion on that fund. And how we can see it that it is cycle is turning or not, we can see from the supply and the number of launches and number the household. And we can see that, and another part is affordability. So real estate demand is huge in India. Only problem is affordability. So there, if you, that's why I say there, and the reason sometimes prices are not going up because prices are not going up. And at some moment, this anomaly get corrected. That's what John Tappan says reason of low price is low price and reason for high price is high price. So there is a period that it gets corrected because fundamentals, the supply itself is not coming because of the bear market. And if you see the prices are not moved up. Okay, you said the prices are not moved in 2013 to 2020. Has income moved up the people? Yes. Okay, so affordability has increased. Are developer making not money? Yes. So number of developers who have gotten vanished like anything, and supply has reduced. At some point of time, extra supply, which was there in 2013, will get over, and suddenly there is a panic. I'm not able to buy a house which I need. And once the prices start going up, which actually went because of Ukraine-Russia war, the interest rate suddenly shot up, and people little bit stand on the fence that whether what should we do or buy. So this, we can talk on the interest rate later on. So some decent inflation in housing is needed, which has happened in last year. So most of the people were waiting that some prices has to go up because nobody want to buy a house which has not moved in 7 years. Okay, so if owner wants an inflationary product, it has to increase some value over a period of time. So I think not high inflation of the prices because that it reduces the affordability, but some decent inflation is needed, and which has happened. The balance sheets of the builder has cleaned. Income of the people have gone up. If you see the HDFC annual report, they have given a chart of affordability. It is at almost low in 2 decades, 115 years or something, 15-year chart is there. And people have mentally made up mind also to buy it. So there's a lot of emotional reason to buy also. There are people who are waiting on the fence. Their prices are not moving. When the prices are moved, like I live in NCR, prices are of the plotting have doubled in 2 years, and apartments have gone up. So people are now thinking they have missed the boat. They're just waiting little bit prices to stabilize, and this is what happens because real estate is one of the asset class where if there is some decent inflation, people buy more. It's not like Mercedes, if the go from 50 lakh to 30 lakh, sales increases. But if the house goes from 50 to 30, nobody wants to buy it. So they want to wait unless they believe in their heart it's an inflationary product. So excess supply has gone away. And after COVID, what has changed is people view on better living has changed like anything. They want bigger spaces. They want to do work from home there. They want kids to go out there because if they're sitting in house for a longer period, they want better facilities. So all these things have changed to a different mindset. And that's why I'm thinking, I'm confident, because supply is also there. Last, if we take a chart of 10 year, always supply is less than the consumption. So there's a one barometer. If you put the night bridge reports or also how many month inventory is left. So somebody says 24-month inventory is left. I'm telling you 24-30 month inventory is considered as zero according to me. Why there is an inventory, but I still consider it as the very less inventory, because many products are at bad place. Nobody want to buy that. So that comes in inventory. Many projects are stuck. Still they are coming in inventory. Some products are not useful according to the customer. That still come in the inventory. And if I've launched something today, that all comes in the inventory. In Noida, I'm not able to find a good, decent apartment at the finish level.
So if I got you correctly, so on ground things are suggesting a clear-cut case of the cycle turning up, right?
Yeah, clearly.
So as an investor, as in if you want to give any framework to people who have joined or people who will probably watch the recording, do you wait for some signs in the market, I mean in the stock market, or do you buy, or do you stay invested now? What should be a strategy of an investor when things on ground are showing an uptick, but the market over here, as in stock market, stock prices are not showing that? Recently it has started. That's a different thing. Yeah.
So point is, market is very efficient in short term. There's no doubt about it. If there is a war, price will correct. If there are interest rate cuts, because market has to run on a short term data. But if one can have a longer view, one has to take the fundamental characteristics that prices have bottomed out, prices are increasing again. One who is buying the land can go there. You can just calculate on the project level, margins are there. You have to find a right developer which you are buying. Can they scale up also? We have to understand the strategy where they are, which micro locations they are available, and can they make a longer money over a period of time. We have to just calculate how much million square feet they are selling, what could be the PAT margin on it, at what valuation they are trading. Point is, because of the accounting thing, all bad accounting is coming on the thing as of now on the P&L. So you have to take, okay, for example, I'm not recommending a stock like Shobha is selling 6 million square feet. Okay, it is a 5,000 crore rupees of pre-sale. When it will come to accounting, how much profit they are making? Do you have a product that they can constantly sell over a period of time? So do you have land bank to support that? And you will see that the kind of multiple they will get when this revenue will get recognized, or maybe because cash flows will come. So we don't want to miss forest for the trees. We may be a little bit early. We may be a little bit money will be go back also. So as of now, I feel that there are long fundamental structure also for India to take it to this kind of height. If you see, even the USA is a mature market. There are still number of houses sold in India than India. Okay, they have a higher per capita, I can understand. But number of houses in China, where we have same cultural things, that owning a house is important. We cannot get married unless we are having a house. In China, a lot of people are not able to marry because they don't own the house. So they are 80 lakh, 1 crore house are being sold. And in India, even this 4-5 micrometer, only 3-4 lakhs houses are sold. In 2013, 5 lakh houses were sold. We have still not reached to that 2013 where the incomes have gone up. We have at the urbanization level of 33%, maybe 34. I'm not a real estate sell side analyst. I may be some wrong in data here and there. So USA is a mature market, like 82% urbanization. China has gone to 50-60%, like half of the people. And we can see clearly the journey, the where it is moving. Now we have moved to Bangalore. Okay, so any guy who has done good education will, if it is living in north of India, he will try to move to Gurgaon or Noida or Delhi. because most of the Fortune 500 MNCs are there. Okay, so we'll move to Mumbai. IT will move to Bangalore, Pune, then little bit less like Chennai, Ahmedabad, and Kolkata. So as people have aspirations, people want better job, people want good schools for their kids. So urbanization is a given trend, long-term given trend for India. India is at 33, 34, 50%. So see the number of houses. People, according to some data, there is so much shortage of housing. It is the only problem is affordability. If incomes are stable, incomes are rising, I'm telling you how we are at housing shortage, severe housing shortage of the quality products also.
That's very well put. But my only point over here is whatever you have said just now, I think the same thesis was intact in the year 2019 or just before the COVID as well, right?
Yes.
And still, if you would have bought then and held on for the last 4 years.
So as we consider to the stock, housing has gone up from 2019 like anything. And these are long-term trends. There are short-term disruptions between. So when somebody is buying a house, it's a big ticket purchase. So he want to be confident of his future income. Okay. So he needs to have that confidence of his future incomes because he's buying a big purchase. If there is a disruption like COVID and you don't know what will going to your job, he will wait. Now the people are see the trend in housing is very, very strong. Even at the interest rate has gone from 6.5 to 8.5, but are not decreasing. As the stock prices, these markets are, we have to take advantage of that. And stocks have moved from there also. And from COVID level, it is much higher. And even from the ILFS level, the stocks are much higher.
Right. So moving on to the next question, I think when we are talking about global uncertainty all around, specifically with relation to the United States of America, don't you think real estate has an advantage as a sector because it is a completely local sector and has no relation to anything outside the country?
So in India, one of the factors for one of the more long runway is our GDP ratio to the mortgage ratio is very low. Mortgage to GDP ratio is very low. So we still haven't taken that much loan. So we are not affected by that much interest rate. So global interest rate, if here increases the interest rate till 8.5 to 9, I don't think there is a problem. But 9 goes to 12, hypothetically. Okay. There might be fear of that. And that definitely at some level of point, it will hurt like anything because EMI will increase to a very high level. So that is the one global uncertainty creates a problem in that. But overall, you have to think like that. You have to take two parts of supply has been less. Okay. Now we have to concentrate on the demand side. So demand will come from the income, like equity. Equity creates income. Income creates demand. So if the incomes are there, incomes are more predictable. Even if the income is there and uncertain, it will not help the consumption. Okay. So if people are confident of income and there is a is more affordable and interest rates are not very high, I think we will do well. Even the interest rates were very high in 2008-9, still housing was doing very well. So I don't want to predict a situation if the interest rate goes up very fast. And because it is playing in the mind, COVID interest rate went down to 6.5. It was a temporary interest rate. That interest rate could not have sustained also anywhere. So even 8.5 is historically low interest rate if you see a 10-15 year graph. But this interest rate should not go up, and more than that, income should not get hurt like anything, which is a factor you have to track. If the incomes are getting hurt, definitely sale in housing can happen. Only part is track the income thing.
So one last macro question related to the sector in terms of, as in, what do you see as the major demand drivers of this sector?
As I said, first of all, urbanization. Okay, people are moving from village to cities because they want better job, they want a better schooling for their kids, they want because simple formula of the housing is follow the jobs. Housing will be there where the jobs are there, not the reverse will have. Chandigarh may have a great infra, but if the jobs are not there, house price will not rise. Even the Bangalore, most shitty infrastructure is there, but the jobs are there. Rent have increased in last 2 years like anything. So you have to take the model of where is the follow the jobs. This is the one most important parameter. And what your main concern, the demand driver is everybody need house. Okay. So there is a debate between earlier that why not should I rent it? Okay. EMI is rent is less than the EMI. So what happened in last 3-4 years, because supply was excess, rent was not increasing. So we have to understand rent is an inflationary product if the people income are increasing. For example, I am living here on rent at 50,000 rupees and it's a good location, hypothetically. And my income has increased in 4 years. And other guys' incomes have also increased. They will say, we also want to, one who is not living in a better location, say, I want to live here. I will say, no boss, I don't want to live here. I will increase the rent. Why will go to that his bad location? So because there was oversupply, people were just wanted their house to be get rented. So rents was not increased. If you Google it, in Bangalore, rent has 50-70% gone up in last 2 years. Why it has happened? You have to think on that. Why suddenly rent up like and then? So it is morely dependent on the income of the people. All down it is coming to the income of the people. So when the rent is less than EMI, they forgot that rent is an inflationary product. Over a period of time, rent will increase, but EMI will not increase unless the interest rate changes. We are assuming these are the more than average 8.5 are the historically good rate of interest. And there will be one period of time where will rent will be higher than EMI. And when the 20-25 year EMI is over, that guy is still in rent and paying more rent than his EMI. This is what people forgot, because there is a recency bias, rents are not increasing at that percentage. So people want to live better. And these urbanization is one of the main reasons where the number of houses, if you see, everything is expanding. Noida is expanding. You know, Noida, Greater Noida, even Bangalore is expanding. Pune is expanding. Mumbai is expanding vertically because they are breaking it and redevelopment and making it up. So more and more number of people have to come. We don't have created that much jobs in the tier 2 and tier 3 cities as of now as in India. That's why people want houses. So if you don't buy it, someone has to buy it to make it to live it for you. Now, if you see Dubai, rents are very high as compared to the prices. Why their rents are so high there? Because even people have income, people have good income. They are not buying because they are not committed to that country. We may come back. So that's why their rents are very high as compared to the property.
Very good point. So in that, if I got it correctly, if you can afford the EMIs, it is far better way of so taking an EMI and owning a house is much better than renting a house, right? That
Definitely, for living house, if you are buying a right product, unless you are buying at peak euphorism, I don't know what is that definition, what price is there. Renting, I don't, but there's the argument. People may give a lot of data also to prove it. I don't want to into that very specific data thing, but I still believe as compared to FD, over a longer period of time, if you put that in Excel, if you assume that rent is inflationary, owning a house is much better than renting, specifically in India.
So now I'll move from the macro real estate sector to different geographical regions of real estate in India. I'm sure the dynamics of all the region would be considerably different. So how should one look at different local markets of real estate in India?
Yes. So if you see Delhi NCR, most of the Fortune 500 companies are in Gurgaon. And if you have in North India, you have to come to get a better job, like some scale. You can get a 50 lakh jobs or 60 lakh job in a tier 2, tier 3 city. So if you have done a good education, you are going to come to that. But it is little bit pricey, little bit, not much. Bangalore is very affordable, according to me, to the kind of income people have. Pune is also a nice micro location. Only big puzzle actually, if you see, is Mumbai. Mumbai is literally not affordable to most of the people, and it doesn't go down much in that part because it cannot expand like Bangalore or Pune or NCR, where there's circle and people are cities, because there is sea on the both sides. How can you? So that Mumbai itself is a aspirational city. One who lives in Mumbai loves it. Maybe outside people may not love it, Mumbai, because of some other factors, but one who lives in Mumbai doesn't want to live Mumbai. That I am very sure about it. Mumbai is a little difficult piece cookie to crack.
So now real estate, we all know, has two parts, residential and commercial. So till now, whatever you have talked about is basically residential. Would you like to compare the two and share your view as to, from an investment perspective, where you are more bullish and where you are less bullish and why?
Okay. So real estate has three parts actually. One is residential, commercial, and third is retail. So commercial is also India has a good sweet spot in commercial. Also, if you see the rentals are around 70s or 70, good A grade offices, 70 rupees square foot. That comes out to be below $1. For someone who is outside USA outsourcing, it is not a great cost to them as compared to their own country. So I think demand of A grade commercials are going to be there. Retail itself is a great part because it's directly related to consumption. But you need a very great skill mindset like DLF or Phoenix to play that, because and you need in commercial and this retail you need a great balance sheet to build also. But I am in favor of more of residential, where you can make money through customer advance, where you can play that cycle. If that real estate cycle plays like anything, what you are thinking, the ROEs would be unimaginable because you are making from the customer demand. If the price goes from 9,000 to 11,000 when you have launched, all goes in the profit. What has happened in the past? You launched a product at 8,000. After 5 years, you're still selling at 8,000. Your cost of construction has gone up like anything. So that has reduced the margin. Now think of the opposite way. If the prices increases, all goes to the P&L. So at this point of time, I would like to play residential. But if somebody has a good opinion on commercial, they can find also, or this retail, they can play that also. Ankit, you are muted.
Oh, sorry. So from national to regional to now company specific, is it possible for you to share a broad framework? I'm sure it's not easy to explain everything on this forum, but still, if you can just give a broad framework of how do you look at the top 8-10 real estate companies in India?
Yes, simple. You have to focus on who can sell more over a period of time. Okay, so you have to focus where these companies which you are reading, in which micro location they are present. Okay, what is the strength in terms of great promoter is needed in case of real estate, because they have to take multiple decisions which, if going wrong, can cause a big problem to the their P&L. Because like Oberoi, because Oberoi didn't buy the all of the people who bought at the peak land, he didn't bought it. So it was a great decision. Okay, so you have to focus how much they can sell over a period of time. What is their sale engine? How they are selecting the land? Are they doing? It is like stock market. Are they buying land when the time is bad, or they're buying land when the times are good? Okay, what is the pulse of their customer? So you just find how much they are selling. What is the profit margin? You can think of it. You have to go deep in the con calls to see the strategy of the company. Does this they want to scale up? What are the factors they are doing for it? So I will suggest to read Godrej con calls to understand more, Godrej Properties con call to understand how to think on that part, because that management explains everything. See their presentation, and if you see the land prices are still stable as compared to price, the big large consultants. There are very few people who can cut a check of 300 crore as of the developers because of the consolidation. So if you are buying land price at the right time, if you are able to sell them You can see their launch cycle. If they are launching, how much they are able to sell in 1 year. That if that part is taken care of, then you can make a good money out of it. You have to see the disclosures also. You have to see the cash flows also. You have to see, you should be able to predict next 4-5 years in terms of which direction the company is going. You have to see their access to capital. You have to see their, because when the time will be good now, the kind of money it will come will be very high to them. Will there has a history of bad capital allocation? So I think number of company might be less in that sector, but you have to go in the deep of, not in terms of number more. You have to see, just hold on, I have to take one. भैया कोई आ रहा है कर लेंगे.
So I can see the chat box and there are a lot of questions and some of the questions are really good.
Yes. Okay.
Towards the end, we'll ask all the questions. Yeah.
So
Yeah,
where
please
are
go
they?
on.
Okay.
So you're talking about the, yeah.
You have to see the disclosure, how much land they have bought in last few years. When they are buying a land, how much fast they are launching. If they have bought a land last year and they are able to launch, see the disclosures in terms of, are they giving pre-sales number. So you have to see as a manufacturing part somewhere, if company is selling 5 million square feet, and that you have to put 15% PAT margin to that, how much they are making, and you have to see the strategy. Can they consistently sell in which micro locations they are? Is the demand inherently there in that micro location? And what is all their strategy? You have to find a little bit and get a good safety of margin.
So I needed some more detail in terms of, can you just give us some names as to, not just one name I'm talking about these are the companies where you see promoters being more aggressive. These are the companies where you see them defensive. These are the companies where you think they have the right strategy in terms of capital allocation. If you can give some example, that would really help.
So these are not recommendations. I'm not a registered advisor. So my point is, I like Godrej Properties. See the kind of business development they have done in last 1.5 years. Okay, you have to see that guy. I got interested in real estate because of that guy. That guy left Godrej Consumer, which was a bigger company like I think I started Godrej Property at when the market cap was 1,000 to 2,000 crore. In 2016, Ashiana market cap was 4,000 crore, and the Ashiana market cap was 2,000 crore. So if somebody has left a full established business with such a big thing where you have just have to sit there, he is not coming here for a 20,000 crore market cap or 20,000 crore market cap. They have explained, they have gone to China to understand how much they can build, how they can create a mastery in building. So you have to see which promoter are agile, because this sector, they are always ahead of the curve. So if you see, is this promoter agile? Is promoter behind the curve? Is learning from the fast changing things? What is happening? Is now they are doing plotting, because that's a new trend after COVID. People are following late. So Shobha, the kind of product they are building. Some people say apartment is a depreciation because it crumbles. The kind of life they are building there, people are taking their apartment as an asset because they are checking. If you go to the experience center of Shobha, the way they tell how they build the houses, how to prevent seepage, how to prevent all this thing, that's an asset you can pass on. So Brigade, Prestige is very aggressive. They are going in Mumbai also. So you have to see how they are able to be more higher over a period of time. What is the strategy? You have to go in the con call. You cannot just run those numbers on the screen. That is a problem in this sector. You have to read those companies. You have to understand the strategy, how they will become big. In Godrej, if you read, you can understand what is the strategy of how they will become big. They are looking at every small aspects of it. So if you got this, I will suggest to read Godrej Property Con Call and make the notes and see how other developers are using their point. So Oberoi is using an aspirational project. The kind of margin Oberois are making is like Onida's old at Envy's neighbors, Envy's owner's pride. Everybody wants to live in Oberoi. So if somebody is living near Oberoi, they have a dream of let's have a house in Oberoi someday. So how he is able to create margin out of the product, how he is able to create more FSIs from the same regulations or something like that. So it's a very, I know it's not a very easy fix. I am telling you, it's you have to go for that.
So my follow-up to this answer of yours is how important is corporate governance? So sometimes, so what I'll just give you my own understanding. Sometimes I see a few investors being so focused on the corporate governance, like India mein sab chor hai, promoters, maximum promoters will not look for the minority shareholder. Even if they find something which is disturbing, they'll completely avoid the company. Do you believe in that kind of thinking, or
I
do you
may
have?
not believe in that kind of thinking on a broader level, but real estate is very important to have good corporate governance. Reason is you can sell at black in this. For example, there is a 10,000 rupees square feet apartment. If they are taking 2,000 as cash, how the company will make profit if you're taking 20%, 25% as cash? So what has happened after all this demon, RERA and all this thing and old developers being perished? Okay, let me give an example. So in Noida, there were so many developers. They all have perished. So new has come. Water doesn't take cash. You have to see that whatever they are selling, they should not take as go as a customer. Offer them cash. If they are taking cash, don't buy that stock. Okay, that is very important to that. You have to see their capital allocation skill because some here and there will happen. That's okay, but these kind of things, selling at cash or there's huge murkiness. Well, all clear will not you will not get. You will find problems. Fingers at Godrej properties also you will find fingers as all over developer. But this major aspect you have to cover that that person should not be selling in cash. And one of the interesting point I have, let me tell you for the real estate sector, because most of the we are equity investors, okay, and we compare with every investment as compared to equity, but most of the people are not like that. They cannot commit a large amount of capital to equity because of two nature. They're very volatile. Second, if you go stock wise, some stocks may do very badly as compared to other your friend. But in real estate, it's easy to understand. If you have to buy, you have to see the location. You have to see the location. You have to see the location which a layman can easily understand. And if you see, most of the film stars are buying apartments in Mumbai. That's why they're why prices doesn't fall in Mumbai as compared to affordability, because all the big people are buying apartment. They are not putting their equity or something like that, because it is a mean of wealth transformation to the next generation. So maybe Rakesh Junjunwala has given stocks to the kids because as compared to net worth, but most of the net worth is passed to as compared as a real estate, not as a stocks. Most of the people. So because they don't know how the kids will react to the volatility, they might not understand it. They make a big mistake out of it, or asset allocation, disruption sector. If you give a place in a good locality, in a where the aspiration of people is there, you can blow it up, even if you want to it. So that's the biggest passing of the generation wealth. If somebody is not passing it fully, but 70-80% he will pass the wealth to the next generation through real estate most of the time.
Very well made. Very well said. So, Manojji, we decided for a 1 hour session, and I see the clock. It is already 7:05. So, can I request for some more time, or you are hard pressed?
No, there's no hard stop. What to do here? Sitting there.
Okay, great. Thank you. So, moving on to the next question. So, REITs, real estate investment trusts, that have been there in the Western countries for quite some time, and now they have also made inroads into the Indian market as well. What are your views on them? Someone who is bullish on the real estate sector, should she also invest in REITs, according to you?
So also REIT is targeted to two part of that real estate, commercial and retail. It is not to the residential. So it is a part of where people want to create a alternative to FD of a higher income bracket. So REIT has become very big outside. So something is which is gone very big, has some merit to it. But I haven't seen REIT much, and the reason being is I want to play a convexity asset class when the stock can go double or triple, and that covers my mistake. Okay, so the upside is capped in that, and you can't buy a REIT at a bad time, because nobody will buy a REIT where the housing is, it is not rented, that is, the income is not coming. So I doesn't want to pay up. But if somebody have a good, you have to break down where are the properties of that REIT. You have to physically think about that. You should be knowing about that, and you can put some amount of allocation. There's no harm in that. But I haven't looked that because of the reason that I don't want to play a concave asset class.
So I'll ask just 2-3 more questions, and then I'll open up for audience to ask, because I see a lot of good questions on the chat box. So my next question is, when you take such a bold call on a sector, and I'm assuming real estate forms are quite a good allocation in your portfolio, right? When you take such a bold call on a sector that is deep cyclical and has long cycles of underperformance and outperformance, how do you think about your portfolio construction? Do you do any hedging, or everything is unhedged? And what is your general portfolio level strategy when you are betting big on a sector like real estate?
So hedging comes part of a risk management thing. If somebody says, we don't do any risk management after buying a stock. So my all thesis, all my process is the risk management. So I don't think real estate is a bold call. I find the sectors which are in disruption, and if somebody has got a value and a perception to that, no, this sector won't be disrupted, don't worry, it is very cheap. I think there is a different bold call. This sector has an underperformance, but there are real pointers why it will have a longer good period. It may not happen in 1 year, because so that's why I have a longer horizon. That's why I don't do PMS or something, because then I'm bounded to make return in that particular period of time. But if I have a longer horizon, I feel it's a very high probability to give returns, and that's what I am targeting toward the high probability for that part. So hedging is here in equity asset class. I don't think hedging, if you create hedging, you stop many part of the return. You have to take a drawdown. If you create too much hedging, it takes away a lot of alpha. And if you have a longer horizon, I think it covers up. But it's different to different investors' need and their where they are placed. So I have clear in my mind that I won't go for the hedging side.
So you are willing to take a lot of medium term underperformance of the portfolio, because you think
not
that
on
over the
real
long
estate,
term,
not on real estate. Every stock wise as well as portfolio wise, that because I don't want to pay up. This will lead to medium term investment, because if I'm buying a company which is in transforming stage, it may not transform according to that space. If I'm buying a deep cyclical, it may not turn, because it's a big purchase and suddenly there is a big event like Russia-Ukraine war or something like COVID or any particular big shock. Or if you are buying something in headwind, it may take more time to cover up. So, and sometimes your variant perception doesn't play out in that period also. That I have to take as a part of the process, that there may be short to medium term underperformance, and if there is a long term underperformance, I have to change the process and to think about that.
right. So now I'll come to one particular aspect about your investing, which I learned from Gauravji when I interviewed him last year. So when he was there on our platform, he mentioned something about uncle point. For the benefit of all, please explain what is uncle point, and also tell us when and under what circumstances your uncle point in real estate will come or will be triggered.
Let me give a brief why this discussion was there. So there is a say expression in USA, say uncle. So say uncle means that, okay, I submit, I give up. Like in WWF, you have to tap the thing, okay, I give up. So in case of investing, if you are reaching an uncle point, so we are saying we have to cut the losses. So there's like Warren says, rule number 1, don't lose money. I think this is the most misinterpreted statement in equity market, you will have underperformance. Okay, it should not be leading to the permanent loss of capital. Like people says, if a stock is down by 50%, you have to cover up by going 100%. It can go 200, 500. Like Gaurav and Ayush bought Shivalik at 100 rupees. So they went to 25. So it has to go 3-4 times to cover up. It went to 10, 20 times. So if your thesis is right, it doesn't matter it is 100%, 200%. It can go to, I have multiple example I've seen in Ayush where the stock has fallen, but ultimately the stock has given humongous return. So temperamentally, so Uncle Point was discussing about that all my and Gaurav, both of net worth is in equity and it is a volatile asset class. So we were talking about asset allocations. Let's put some money in this part, or so I was saying that whatever we do, we should not reach our Uncle Point. We should not reach to a point where we have to create a hedging or risk strategy. From the beginning itself, it should be designed like that. For example, we are 100% in equity and COVID happened. And suddenly there's a lot of uncertainty. Okay, COVID might be extreme example and 50% is fall. And emotionally, I'm not able to take that kind of loss. So I will say, let me sell 20% of it and may reduce my pain. That should not come. If you're not that emotional, you should put some 20-25% in FD, hypothetically. So you will, boss, my Uncle Point won't reach. Or you make a very big position in a stock and suddenly there is a bad news. Okay. And that bad news may be temporary in nature, but you have a big position, it has fallen. Now you have to sell that stock because you are not able to bear that pain, or you are fear that my whole net worth can go away. So your Uncle Point will reach. So you have to begin with the beginning, the kind of stock you are selecting, the amount you are putting. So you should never reach a Uncle Point. So people think we will do risk management. My point is we should not reach to that stage where you think of the risk management, because most of the time when you are doing that, that is the time to do the opposite. So you have to pre-imagine what would cause your Uncle Point and what you are doing from the beginning. If you are buying on tips and the market falls, you will reach the Uncle Point fast. Okay, you are not confident about the stock. If the stock is falling, Shivalik is from 100 to 25, you will sell that stock instead of buying, which Ayush and Gaurav did. So if I have liberty, so how Gaurav managed his Uncle Point strategy. So what he did a income creating strategies of options. So half, maybe 40 or 60 is going in equity long and maybe some in options, which is giving a revenue stream of constant. And if the market is volatile or fall on something, he's like, okay, doesn't matter. Or even he's taking advantage of that. Now that when the market falls, the price is that, he takes some money from the options pool or the income which is giving, and he's buying at Shivaliks at 25 and 35. So he's taking the advantage of that. So this was my whole point. It's not that how you manage the risk, how you should not reach to the point where you think, yeah, we have to manage the risk.
I think this is probably the best thing which I learned in today's session about this, because even though I knew about Uncle Point, but this got much more clarified today when you, thank you so much for this, because I think this is applicable for all our investors, and we all face this Uncle Point. It's just that we don't realize. We take all the action like COVID जैसे crisis पे हम लोग वो action लेते हैं, rather than thinking about it in advance. What will happen if something like that happens? Right.
So something will happen which you haven't thought about it. Just think emotionally, how emotional you are, how you're creating, and it may still reach. Still, maybe you will reach to that point. But our work should be that it should not reach to that point. Our endeavor should be that it should not reach to that, because that at that time you have to take that decision. You have to cut the losses because you are not able to bear it or whatever. And that might be the wrong decision, most probably.
If I got you correctly, you are not going to reach that Uncle Point in your real estate bet. You have designed your portfolio in such a way.
That is the point. I have to buy a good management. I have to buy at the right price. I have to see the inherent character and the quality of the company. So that can help me to hold the stock. I should have asked in the beginning, because it's a deep cyclical sector. It can go to the shock. I have to allocate it that way. I have to find those companies which can bear that. So what are the biggest Uncle Point can be? It should not be high debt. Because if my company faces a problem in real estate and a high debt, I will reach to my Uncle Point. Even if that company survives, I will get fearful. I will sell at the worst point. So in Shobha, there was little bit high debt. In COVID, it went down from 600 to 120. But I had that feeling that these guys have the product of absolute quality. If they put a 20% discount in Bangalore, that product will get sold like anything. So that problem will be solved. So I have that percent. So we were able to take advantage of that. We bought at lower price rather than selling at lower price because we have that understanding. So we didn't reach that anchor point. Even Godrej Property as a developer bought 10% stake in Shobha during that point of their own competitor company. So there that variant perception that there the debt people were selling in COVID Shobha because they felt that is a problem. And what will happen in future, nobody knows. And this company has a debt. And we have a perception that his inventory, if put at 20% discount in Bangalore, will sell like anything. And all this debt won't be a existential crisis. Maybe it will hurt the PNL, but it won't be existential crisis for that company. So that point didn't help us to reach the uncle point. So that's why many, in terms of asset allocation, in terms of company understanding, all this thing will help us. But I can't say about future. But this is an endeavor that should not happen. It's not a good thing. It's a very bad moment if somebody reaches a point.
Thank you so much. So one last question before we open up for audience question. So I learned this from you very recently in our discussion over the call, where you talked about non-modelable business to a modelable business. This is also a unique concept I learned. So I would like
it's
you
about
to expand.
not modelable business per se. It is at what stage we are. So like we buy something in headwind or transformative stage, we say, because we want a good company at a price where we don't want to pay. So market will always see the short term. If you're not able to predict the short term, okay, so you will be not able to, the price will fall and that's opportunity. But at some period of time, if it is being modeled, okay, for example, demon happened and there was that next year there will be no one will be buying the house. Okay, this is done deal. But if you see things will cover up, okay, and now what has Godrej Property has sold 10,000 crore of 12,000 in this year. It was 8,000. He's saying I will sell 16,000, 14,000 next year. So it is looking like modeling is happening. Okay, so real estate per se, because the numbers have not come in PNL, you have to foresee it. You have to have some other calculation in your mind where you can think about it. You can think, you have to be long. Okay, if it doesn't come in next year, profit will come. So real estate doesn't give easily modeling as compared to other, but others will also be part that stage where they will be not to be able to model, and there we have opportunity. So stock should go from uncertain time to certain times in terms of modeling, because people will model next year earning. If you see on the con calls, they are asking next year sale, what will be the PAT margin, take tax from the income tax website, and they want to appoint something, and that's how most of the time it will work, and they are being good at it and they can make money from that style also. I'm not against any way of finding that.
Then how do you look at valuation when you buy into a real estate stock? How do you value businesses?
So this is again that point I am looking at, can that, are they in right micro location? Can they sell that much of amount of real estate, X amount of square feet in that micro location they are? What is the strategy to double that? And we can value on the earning of that. For example, I'm just thinking, may go wrong, is Shobha is selling for 5 to 6 million every year, and Bangalore is a consistent demand state. Unless something very bad happens in IT, then I have to short term think about it. So it's a very consistent. Manufacturing is there, IT is there, defense is there. So lots of jobs are created in Bangalore. So I am assuming this is a very low, this is a base of that, and they will go to 7 or 8 and they are telling in con calls and what is the strategy for that. If they're selling 5 million hypothetically at 5,000 crore, and the PAT margin, I am assuming on the upcycle where the margins will be higher. So it comes to 750 crore. Now the company is trading at 5,000 crore. Okay. So can this company command a multiple of 20 at the higher growth? So I think like that. And what is the IRR from here? And these kind of companies, if suddenly something is happening, if nothing, that target is not met, they will cover up, because all inherent structures of macro and micros are there in that company. I'm not recommending that stock, but I'm saying PAT margin may be different. Maybe 20 also good, maybe it is not coming 10. There I will learn what kind of safety of margin I am putting in that. So I am taking on the cash flows they will make through square feet. I am not taking through NAV value. Okay, many companies have land value, and there were most of the companies were being valued through NAV. I think land should be the assister of that selling model. If somebody is holding land and is not able to sell, I won't value that company in NAV. Whatever they do, they buy lands fastly churn like Godrej. Okay, somebody has old land parcel and they are able to consistently sell the product at price and making margin. Okay, selling.
But in the last bull run, 2003 to 2008, I think real estate companies were valued at land bank, right? So that was probably
that was the mistake. No? That's why the wrong happened. So that was the investors, because globally it is looked like that. I want to see through DCF. That I think that's a mistake, but partial mistake, not full mistake. Because if they are able to use that land bank fastly, because people were not even thinking whether they will be able to sell or not, because they were in bull market. They were just thinking somebody has land, because prices were going up very fast. They were assuming that they will be able to sell it, and on the top of it construct it. So they assume that if Unitech is buying X amount of land, they will put it in the NAV model, put the PAT margin. They have just bought the land. They have to get the regulatory approval. They have to think of a product. They have to sell that product. They have to price it properly. They have to make margin on that. On that day you used to buy the land, their NAV model will give you. Don't you think it's a flop model?
Now I'll open up to the audience questions. So Dilip Vora asked this question. Do you do any scuttlebutt or do you meet management? And if you do, what kind of question generally you ask and what do you avoid?
Yes.
As in, if you can give us a framework as to if any one of us want to meet management and ask or maybe evaluate them, how should we go about?
So first of all, one scuttlebutt I will like to do in the real estate company, that they are not taking cash as we go as a buyer of the property. How their management representatives treat you? Are they eager to sell or they're just lethargic in nature? We have to see the projects in the sequence of 2000X or 2000X plus 5. Are their products are getting better? Are they giving on time? On not on a single project basis, or one or two project may go in some regulatory order over a broader period of time. And meeting management doesn't serve the purpose if you're not asking the right question. So most of the good companies of real estate are doing con call, and the sufficient information is covered. And you can participate and ask your question also. I don't think apart from Oberoi, everyone takes individual investor questions. And I think that's the scuttlebutt important part is there. You have to see if more possible. If that is difficult, that you have to see that part of corporate culture they are building, which is a difficult thing to find out actually. I don't know how to crack it, but you may know from some of your friend where somebody told me this is a great culture, and I got that information and used that, but how to crack that is a little bit difficult.
Right. The next question is from Prince. He asks what it takes for brand building, and say once an image is tarred with not so good construction quality, can that be recovered or perception has a big impact over a long term?
Yeah, it has impact, but that can be covered. Some of 1 or 2 because it's a very micro location thing. And in location also micro location, like this area's product was bad and new product is good, and people are enjoying that part. So definitely good management should do as much as possible to avoid the tarnish of the project, even they are losing money on that project.
Right. So next question is by Anand, who mentions that, who asked that real estate is a big time cash business. How will an investor actually know how much is actual business?
It has changed after RERA and consolidation. It has corporatized. So I'm in Noida. Who was a developer now? Earlier Amrapali, Unitech, Wave, this Supertech. All that there was some part of the business. Now who are there? Godrej is there, which is not doing cash. Max is there, which is not doing cash. M3M is not taking cash. So, and if you go to Bangalore, Shobha is not taking cash, Brigade is not taking cash, Prestige is not taking cash, Oberoi's are not taking cash. So now it is being corporatized. So that part has many listed companies are gaining market share. They are becoming bigger. So that part is there. If it is a cash business, we have to trust on that part. Some cash business would be always there, little bit, but not on the selling point. Like some cash business they have to create to pay to the regulatory or somewhere. I don't know, want to comment on that. And maybe some cash is coming, but it won't be a big part of it. You won't find a perfect company, but you have to create that much level that I will be ready to take it.
Right. So next question is from Satish. He says, I think he's mentioning the point
No,
which you
no,
mentioned.
I don't think it's interested. It is after everything, and it's a simple basic maths also that our incomes have gone up. You can ask anybody's friends who are in corporate what was their income 10 years back, what is their income today, and what was the housing price that day, what is the housing price now, what is the interest rate 10 years back, what is the interest rate today. You can find out also. It's not a difficult thing.
Right. So the next question is from Soham. He makes a very good point over here. He says that the housing market is split between affordable and upmarket luxury housing. On a number basis, affordable housing seems to be the market with a longer runway, and yet the recovery in affordable housing market is absent. Instead, the luxury upmarket housing market is going extremely strong.
Affordable market has a huge tailwind also. It suffered a big headwind in terms of commodity increase price because they have a wafer thin margin. Like luxury have a good margin. So the cost of construction to the end product is not so affected. Oberoi's are not affected by steel prices increase. Oberoi Realty is not getting affected. Actually, its margins are increasing. But if you somebody is affordable, that margins goes away. Just hold on, I have some water. So affordable suffered a headwind during last 2-3 years, but it's a good sector if somebody is able to manage the cost. We have to play on that management that margins are less in this field, but volumes can be great. One can easily scale up in that 50 lakh or something. Demand is huge. And what has happened in COVID is little bit lower people are getting impacted. All IT people will work from home, but one who is doing job in restaurant, one who is in retail, their incomes got affected like anything, and actually the middle to upper class get benefited by COVID.
Sure. So next question is from Abhishek. I don't think I understood the question. Maybe Manoj, you would have got the question. What's your take on builders who provide FM services whereas other builders who develop and simply hand over?
Okay, I think FM is management of that thing. Asking for an investor for the first-time property buyer. I think Ashiana provides FM services. But what is happening is now these good developers are also taking care of the services they will hire or they will do. It's a scuttle, but they have to do about which area they're there. But you can go to any prestigious developer. You think of the location, you think of the price. Don't put FM services as a very top priority.
Right. So next question is from Sahil. Sahil asks, last 3 to 3, 5, 10-year ROE for Godrej and Shobha is in single digit.
That's why I told that last few years has been bad. And in case of Godrej, this company is growing. Okay, so they made a lot of mistake while growing. That we don't see it happen. Now this company is because it is growing. Accounting give you profit in the later stage, and all the expenses of a growing company are front loaded in real estate. If they are selling 12,000 crore worth of real estate, and for example, selling expenses 5 to 6%, so 722 crore will be debited in the P&L. And the accounting of a growing, because they will be accounting when they sold 6,000 crore this year, so PATs will not come. So you have to take the guidance of management. You have to go to see the project level. Are they making money? It may be making sense. And Shobha also, even though it has grown not that fast, some of the project might not have been. So you have to see from this year or where the cycle has revived. how much they are selling, are they making money, and how much ROE. Godrej has raised the capital also. So suddenly, if somebody has raised the capital, denominator increases, numerator will come later. They say we are X raising capital 20% ROE, and after that we will reach 3-4% at 20% ROE.
So the next question
ROE
is
will
from
be double digit for Godrej and Shobha.
double digit means what timeline you are looking?
10 to
No,
99.
what time?
Anything what Sahil likes. But won't be
Okay.
99 or neither it won't go above 20. But
No, I'm
double
talking about
digit.
the timeline. I'm talking about the timeline. You know, how many years you are thinking that it will reach to double digit?
Problem is, in terms of cash flow, they are reaching. In P&L, accounting will be different. So let me explain you. If they are selling a house today, customer is logged in, and they are getting cash from the customer, and they are building it, but they will only account when the product is delivered. And when the product is delivered, then only they can put in the P&L.
So what is there special in Oberoi where it has a 15% ROE compared to Shobha? And
First of all, it was in luxury project. It didn't make any mistake during the bad part of the cycle. It's the only company. Third, this is the only company which has taken a different accounting, that they are taking accounting of the by-part construction. Why other people are not allowed to take that and Oberoi is only doing it? What happened? There was a case where people sold the apartments, and suddenly there was cancellation of apartment. So negative sales happened, and that was allowed in the agreement that they can give back the apartment due to some conditions. To cover up that, they put that okay, sale will be given only when it is handed over to that. Oberoi is in only Mumbai, and Mumbai agreement doesn't allow that kind of cancellation. So that they are taking on the landmark, okay, first 15%, 20%, but they are recognizing in the P&L, which other people are taking a different accounting.
right. So basically, we have to make it like to like comparison when we compare these ROEs.
No,
Right?
both. He's doing accounting, he's doing well also because he's luxury is doing well. He didn't make
Okay.
any mistake. He's selling those land parcels which he bought in 2000. So Goregaon, he bought in so much land year old back where he was so much forward thinker that I am buying that land which I will monetize over a longer period of time. So that part is coming. So we have to go in depth how he is selling, how he is buying the land. We have to go in that. We can't run through this real estate screener. Sorry, Ayush, people won't be able to make so much decision on the screener.
So Gaurang asks what to look in real estate stock financial statement analysis, as in terms of numbers. What do you see? What are the major things which you look at?
First of all, debt should be manageable. Second, the numbers will come. ROEs we have to see over a broader period of time, and
also higher customer advances should be a plus according to you.
Yes, you will get it as you through balance sheet also. I will see through number of pre-sales also. So customer advance is a definitely big part of it. If you're able to crack that customer advance, now you are making money. You are making a product through the customer money only.
Yes. Automatically your ROE goes up, no? If you
yes, automatically
customer advance.
If you are able to sell faster, your ROEs will go sell faster at a profitable price. If somebody says I'm selling at lower price, then profit won't. Right. That's what cycle is coming. That's why I'm assuming the cycle is in uptrend. So most of the people will be able to sell at the profitable price.
Right. So Tarun asks, what about the uncertainties related to commodities? Lot of data points to uncertain commodity prices. So can this seriously hurt the bottom line?
So these are the two factors I would like to put in that. First of all, that when the COVID supply shock happened, the rise in commodity was unseen on that. So we are assuming that kind of thing as not as a very permanent junction. Second, if you want to have a good margins before selling also, like they should not be selling assuming that commodity price should not be getting higher. That should be built in your price selling, that even if it's selling, that should not affect. Third, if you have a thesis, for example, that commodity price will rise like anything, and everybody has a thesis of something, then affordable will get affected. and luxury won't get affected.
I think Kshitij makes a point which you have already covered, so I'll skip that question. He's talking about uh, tier A towns with better urbanization prospects that you have already covered in the
Yeah,
second
yeah. There is a chance that people are saying that if you go for a work from home in a permanent way, in a big way, tier 2 and tier 3 will also get good market. But still, I believe urbanization both will happen, and tier 2, tier 3, it will slow down for a longer period. Maybe India will reach to 55 and not urbanization a period of time after 10, 15 years, maybe 45 or 48. If tier 2, tier 3 are able to let, people won't like to leave their own city. There's a definite. We have to see that we'll be happy if that's what things also happen. But still, aspiration of people where the good institute, good hotels or good entertainment is there, and we have to see. As of now, it is a long runway.
Right. So Naveen asks, it's an interesting question. Will the demand in real estate in Chandigarh and Zirakpur, adjoining city to Chandigarh, continue for next 5 years?
We have to follow the jobs. If they are creating jobs, it will definitely.
That's a good thing which I got. As in, अगर कहीं job हो रहा है, तो real estate will boom. Right.
Yeah. Because people will live there. People won't live 200 kilometers from the job.
Next question is, I'm skipping a few questions which I think is of no. One question is specific to Suntech Realty. Do you see any problem with Suntech Realty as a company? Have you looked at the company and?
Yeah, I've looked at the company. Everybody has a standard of corporate governance. I say it's a good company. I don't know if somebody meets that properly. He's a good, aggressive guy, and he has made very good, aggressive, good calls in the last 4 or 5 years. So I find it as a good. I may not invest it because I will see the valuation, or maybe for me, Bangalore is a good, stable market and affordable market. So I might be playing some other, but it's definitely, if somebody can give it, he's a good promoter.
Tarundeep asks, with more and more people living in apartments, can maintenance business become a good annuity business?
No, I don't want to think like that. That would be a small part, and I should not bet on that.
Ganesh asks, do you think reduction in black income in the country impact either pricing or demand? A good part of our low 2 to 2.5% rental yields could be a function of inflated prices due to part payment in black.
So part 2 is decreasing in our country to that some aspect, and most of the housing parts are getting corporatized, and there is not there. Definitely, housing demand was there from 2008 to 13 also, and at that period, part 2 was much bigger. I think so it can sustain with that amount, which is today also. They grow with that amount. And rental, I am saying in a country where the incomes are growing, rental would be less because it's inflationary. Housing will be more higher. It cannot be at 7% rent. Why will somebody pay 7% rent instead of not buying it? So it has to be lower to that value, because rents are going to increase not in linear fashion, over a period of 10 years. I am assuming today rent is there in 2023, 50,000 or 60,000. In 2030, it will be double that. May not be that year, next year, but over a 10-year period of time, I think rents will increase unless the incomes of the people are not affected. And we are assuming that Modi is talking about 5 trillion, 10 trillion. So that if that journey is on a path, income of the people are increasing, I think that rent should be high.
Second. So next question is, Gaurang, any views on Bombay dying? They have a lot of land in Mumbai and Purvankara, which is Bangalore.
So Bombay Dam, I haven't tracked that thing. You can track it. Purvankara is affordable, and I think it can be. And it's in the right micro location. It's in Bangalore. Yeah, like that as a market.
Sure. Next question is, so Tarun asked an interesting question again. At this juncture, what do you suggest, buying real estate property or real estate stocks?
So if somebody is a user, I think property is still a good junction, and don't know where they are. If somebody is in Delhi NCR, prices have gone up very fast. Maybe they can wait or something like that. But somebody is in Bangalore or Pune, I think I haven't known that, but still their markets are affordable there. Stocks you can also buy. You can. So it depends on the usage. If somebody is buying property for investment, is a different thing as somebody buying for living. But housing prices can go up from here over a period of time. Somebody is thinking house price won't go up. I don't feel that would be a case going forward. Maybe if no external shocks come. It depends on the location also. Okay. Somebody has a good edge that airport is coming. I can buy that also. It is like stocks. Properties are also like stocks. Somebody has a foresight, यार ये मोदी जी आए हैं तो वाराणसी में लेना है. So I cannot just generalize that very.
Yeah, but I think in case of buying properties, again, you have to be very careful as to which builder you are. betting on.
Yeah. That is given.
Next question again is from Tarun. Tier 1 developers are very well understood, but how about organized players in Tier 2 cities? Example, Eldeco in Lucknow and AGI Infra in Ludhiana, Jalandhar. These cities will have demand, but few good developers only. So how do you
There
see
will
that?
there will be some developer which are very good and in micro location which you haven't heard, like AGI. You might I not have heard. I heard little bit. Somebody might not have heard of this Happy Build or something like that. Hyderabad sells a good product. You have to get to know from the market. Most of the time, you will get the information from the market. If that guys are listed, you can easily check doing it. If any company is doing con call now, most of the time they are not selling at black, or because people can easily find out.
So thank you so much, Manoj ji. I think I've exhausted all the questions now. And we thought for a 1 hour session and it is almost close to a 2 hour session. Thank you so much for your extra time. Any last closing thoughts before we let you go?
I think everybody can have a different style, and there are different ways of making money in stock market, and one can follow that. And it's not necessary that you have to follow one sector or something which is more comfortable and which you get more conviction and clarity.
Thank you so much. Thank you so much, everyone, for joining on a weekday, and we'll share the recording as soon as possible. Thank you so much, Manoj ji, once again.
Thank you.
Have a good day. Bye.